too much about this. It's the tax practitioners, firms, and households that are looking for loopholes, not states. But there sure are a whole lot of them doing so right now. In part, who knows? It may be in part due to the speed at which the legislation was put together at the U.S. level. So there's maybe a little bit more ambiguity than normal, which makes more loopholes, and maybe also due to perception that some of the tax changes targeted individual states, and so that's where I think a lot of the justification for going after the restructuring state and local taxes to maintain the deductibility. Now, I won't go into too much detail because Chris hit all of these before, but the idea, one, would be to turn it into employee payrolls on the payroll side. Let the employers pay the tax rather than the employees, because the employer, it's still fully deductible, whereas there would be a cap for employees. This one is not entirely crazy. I mean, Oregon already, collects payroll taxes for unemployment insurance and the like, and so it is doable. And in some ways, it's more than just gaming the system. Some folks would argue that, if they're interested in reducing the burden on workers and households, some folks do have advantages, payroll taxes. You don't at the end of the year have to file a return for your Social Security. It just comes out of your payroll taxes, and all the administrative costs are on the employer side. Similarly, that really went into the charitable contributions. This is one, as was mentioned, is done. As Chair Barnhart said, when we do auctions here in Oregon, it's done. About a third of the states right now allow for you'd purchase private education, to subsidize private education through tax credit. So there is, this is possible now, but it's of course a question of degree. And so I'd like to point Representative Nosse to the link at the bottom there from the.
I tried to open it actually, but it's from Yale and it's long. And
yes, but if you want to send something to your constituents or asking about the nitty-gritty legal details of what's okay and what isn't, there's at least one take on it there. And finally, a similar one, franchise taxes on pass-throughs. The idea being to mock up an income tax for the pass-through income as well. Similar to the first one, which is employee payroll taxes for those that are employees and getting wages. And Chris also mentioned that it's important to look at this interplay, I think, between the new deduction for pass-through entities and Oregon special treatment, given that they're approaching the same sort of issue. But now finally, talk a little bit about state policy and the forecast. Now, while we are seeing a lot of states react, luckily it's not our job to predict what this honorable body is going to do. We do what's called a current law forecast, which means until a law is signed, it is not in our revenue forecast, and no matter how likely. So, for example, right now in current law says that the earned income tax credit is going to expire in 2020. It's highly unlikely that the legislature will do that. So the overall revenue forecast is 150 million less maybe than it could be otherwise if that were involved. And so any of these, significant or not, are right now not in the revenue forecast. The other piece is any changes that are made here in the short session or any special sessions do impact the kicker. And in fact, these indirect impacts and direct impact from the federal change do potentially impact the kicker calculation. The kicker threshold is set right after sine die in the long session. And it's locked in without a 2/3 vote by the legislature. That estimate is locked in.
Changed. That should be changed.
And unchanged.
So sponsor that bill.
Do you have a bill?